It is a sign of the times as risk appetite has grown. Assets under management of leveraged and inverse ETFs has grown dramatically. It was about 2% of ETF assets in 2016. It's almost 8% today. That's real growth. More importantly, trading volumes exploded. On any given day, dollar volume in leveraged and inverse ETFs are often among the largest daily dollar volume ETF leaders. So what is behind this explosion of interest? Who exactly is doing all this trading? Let's talk with Douglas Jonas. He's the CEO of Direction, along with Todd Rosenbluth, head of research over at Verify. Doug, I presume everybody knows you are one of the largest providers of leveraged and inverse ETF products. Every day I look at the volume charts. I see your semiconductor bull ETF. It's always up there in the dollar volume charts. It gets 3 times the return of the semiconductor index. Those of you who don't know that on a daily basis. Your 3X S&P 500 always shows up on the volumes. Just tell us who's doing all of this trading. The volume really has notably moved up in a while. Who's doing it? Give us a sense.
Volume and assets. I mean, the reality is it's no surprise to me that you're seeing the Direction lineup of ETFs on the chart in the top 10, top 20 ETFs traded every day. Those out there, you know, we think is when we try and measure this, we think about 3/4 of the folks trading are retail, and another quarter is institutional. And you know, it's interesting when those are there's varying use cases for why you would want these leveraged ETFs. They tend to be all short-term in nature, which is, I believe there are some news coming out that I want to trade around. We've got NVIDIA results coming out Wednesday, right? There'll be a lot of movement and traffic there. Could also be reactionary to what we're seeing in terms of headlines. Could also be, as simple as a trade desk or an individual saying, I want to hedge my position. You know, we have a lot of securities in the market that are up a lot over the last 5 or 10 years. Market seemingly has been going sideways. We saw Friday's correction. There are people out there that are saying, hey, maybe I don't want to be fully invested, but also don't want to take the capital gain on selling a position. Yeah. What can I do? I can take a long position in a short ETF, an inverse ETF. I can basically neutralize my exposure.
I want to put up that full screen we just put up, who's trading leverage and inverse ETFs, because there's an interesting point you're bringing up here. You say about 12 to 15% of the volume comes from outside the U.S. South Koreans, you mentioned? I've heard this before from the 24-hour-a-day exchange people. South Korean, young South Koreans, young Japanese. Who are these people?
You're right. You know, it's hard to measure again, but you know, thumb in the air, we think somewhere between 10 and 12% of the assets in all of these leveraged and inverse ETFs are coming from outside of the U.S. The use cases are often the same, but a lot of times it's often, you know, investors who want to participate in the U.S. markets. There's a lot of news coming out of the U.S. markets. There's also been a lot of growth out of the U.S. markets. And so if you're an investor outside of the U.S., in particular, a lot of these Asian-based countries, they do have access to the U.S. market through the New York Stock Exchange. They can trade ETFs and securities that are listed here at the New York.
And Todd, one of the things that's amazing is when I talk to people about this, these people overseas, they have kind of flattish markets, and they're watching, you know, on TV. They're 12 hours away, and yet they seem to want to try to participate. This is sort of part of the impetus around the 24-hour trading story. You know, the foreign traders. It's quite remarkable to watch this kind of level of interest. I gather their local markets aren't as interesting, and so they try to figure out. They're very, shall we say, not risk averse necessarily. They seem to be quite eager.
Well, the biggest and strongest companies in many cases are in the United States, whether they're technology companies, Apple and Microsoft, NVIDIA, or they're other growth-oriented companies that you can find single stock leverage ETFs. So we're finding more and more investors, retail, as well as some advisors that are learning about ETFs because through the individual stock, and then they're getting the benefits of diversification and liquidity that they can get through that ETF wrapper.
Now, so when you talk about institutional investors, you said about 25% of people here are institutionals. You're talking about a broad swath, like hedge funds, trading desks, large brokerage firms?
Yes, yes, and yes. I mean, there are a large amount of institutions. There's even, you know, how you categorize registered investment advisors. They might have a sleeve of assets that they have for very aggressive positioning, and they'll use leveraged and inverse ETFs. But going back to large hedge funds, those that are really reacting and want to try and pre-react to a lot of the market news out there, they want to take short-term positions on individual companies, and they also want to do it on the overall market. it could be semiconductors, it could be the banks, it could be home builders. There are a lot of market-moving headlines happening every day.
Could be anybody who has a book of positions that wants to be neutral to the market.
That's right. Or even if you think about a trade desk, right? There's folks that are surrounding us here on the exchange floor that have large positions in a lot of securities. They might want to neutralize their risk, or let's say they're short the market, they need to bring that back to zero, and they'll do that using the direction lineup of ETFs.
Todd, the assets in leverage inverse products are becoming a larger part of the whole ETF universe. This is what's interesting to me. I mentioned 2% of assets in 2016, it's 8% today. I know Direction and ProShares, they're sort of neck and neck in terms of the largest ETFs in the space. I look at ProShares, Ultra Pro, QQQ, there's competition here, TQQQ, they're 3x leverage, 3x leverage exposure to the NASDAQ 100, $26 billion, look at this in assets here. Single stock ETFs that leverage NVIDIA and Tesla are also really big. There's Direction Semiconductor Bull, 3x, almost $9 billion. And like I said, it's not just leverage and inverse index ETFs, the single stocks leveraged ETFs, they're growing fast as well. There you see long NVIDIA, there's long Tesla that are there. These are among the heaviest volume ETFs out there, 2-time long NVIDIA as well. Comment on this. I mean, it's remarkable to me to see the assets growing. Now you can say, well, yes, there's a certain bull market effect here, so the assets under management tend to go up, but even the average daily trading volume has been going up, the dollar volumes have been going up, and the assets under management are going up. So all the metrics, you can't just say, well, the market's overall is going up, therefore no surprise here.
Right, the leverage and inverse industry has evolved. So TQQQ was the first of those ETFs that I can recall, 15 years old. But as you showed on the screen, Direction, ProShares, others now have single stock leverage ETFs that have become very successful. And the single stock leverage ETFs probably sounds hard to wrap your head around, but it's one stock, you get the risk on, or in case of inverse, risk off exposure to that, and the liquidity benefits of the ETF wrapper. So we're seeing more investors turn to that. At our websites, ETF Trends and ETF Database, we get disproportionate of our traffic towards our leverage and inverse channel because people want to learn about individual stocks, learn about the ETF exposure to that. And so the volume and the interest is perhaps even stronger than that asset base.
You know, you can slice and dice this a lot of ways, but what I have noticed every day is of the top 20 ETFs by dollar volume, there's usually 5 or 6 that are in the top 20 right now. So the ProShares Ultra Pro Triple Q, your daily semiconductor bull always shows up in the top 20. Your Tesla bull, TSLL is the symbol there, always shows up in the top 20. ProShares Ultra Pro Short, QQQ, Granite Shares Long NVIDIA, these show up routinely in the top 20 ETFs right now.
I mean, the reality, Bob, is the markets today, they are direction weather, right? It's not the old days where we wait for an earnings report, we see if there's some growth, we wait for the CPI or PPI to come out. There are market moving headlines happening 2 to 3 times a day, and so the volatility is growing up, not down, and we think that holds for the whole year. So if you're a hedge fund, if you're an individual trader, or you're an RIA, you're probably needing to react to that in some way, and so it's no surprise to me that those with short-term investment views are going to play that out in the form of a leverage or an inverse ETF.